Hi, folks. Dan Bird here with the Daily Scan. Today is November 14th, Thursday, the day before options expiration tomorrow. So we're sitting right on the edge, right on the precipice. The market actually didn't react too negatively to CPI. I think it actually came in as expected. So we dodged a bullet there. That was nice. But now we've still got options expiration and the next couple of days and next week to get through. So let's jump into it and take a look at where things are. First, as always, we'll take a look at the market bias as of today. Ticked down again a little bit, but not dramatically. However, if we look at the charts, you can see, and let me turn on my cursor. You see right there, it's starting to accelerate to the downside. So I mentioned before that it was kind of rolling over through here, and now today it's accelerating. Now it's about 10 minutes before the close. So likely that's going to be what it looks like by the time we get to the close. If we look at the S&P, it looks very similar. Usually when I see something like that, we typically get even more acceleration the next day. So we're heading down to the support line. The 21-day moving average is coming up to it. That hopefully will be support, and maybe it will turn back around there. But it doesn't need to be. It could drop through it as well. And there's still a gap down here to be filled. So we'll see if that happens. So for the market in general, things continue to go down. One more day till expiration. If we take a look at the 10-minute chart just to see where the gainers and losers were today for the sectors. This is the aggressive sector. So here's the market. The vertical blue line over here is Monday's open. Last Monday was 57.25, so we're still above that, which is good. But you can see all week, this week, it keeps trying to rally and get back through the open from Monday, but can't do it. And today just basically sold off pretty much most of the day. And right now, we're at the lows. We are just about 10 minutes away from the close. Technology had moved up a little bit, but for the week it's down. Financials, again, also moved up a little bit. For the week, it's up slightly. Discretionary is flat. Communication services, again, is where most of the strength is today. Industrials, really not doing well at all. I mean, industrials has been one of the stronger ones up until this week. So industrials has really started to decline. If we look at the defensive sectors, same thing at the top, but healthcare, definitely weaker. Staples, pretty much flat. Energy, again, also is the big winner. So energy and communication services are the two winning sectors this week. Utilities is flat. And materials, again, once again, is slightly down. So we'll take a look at gold, which is in the materials sector. And this is the bias matrix. Semiconductors actually got a short-term down signal today. If we look at semiconductors, you can see right there, that's the short-term down. Now the short-term can go back and forth pretty quickly until it finally makes up its mind. So this could turn back around again. And after next week, that very well may happen into the end of the year. But right now, it's got a short-term down signal. What else? Gold we wanted to look at. Gold down here, it's already has, it still has, it already has a short-term down signal. So that happened right back here, and it's continuing to drop. So that's why materials is weak as well, because gold just continues dropping lower, and silver as well. Same thing. So there's the short-term down. A couple of more days, and it will get a medium-term down. But silver also is just dropping off a cliff. We'll look at the dollar real quick. Here's US dollar right there. Dollar just zooming higher. There was a question to look at the US dollar versus the Japanese yen. I'll take a look at that in a minute. But it's probably going to look very similar to this. So the dollar has just been getting stronger and stronger ever since the beginning of October. That's telling us that inflation really is not an issue right now. Even with a little bit hotter CPI, I think CPI is going to start coming down after next month. So the dollar is continuing to be strong. The 10-year yield is hanging in there right around 4.45, right in that area. So still elevated, but it's not really zooming higher, but it's not coming down either. So it's just kind of staying in the same place. Now, interestingly, the inversion, the yield inversion yesterday actually went below zero briefly, but then closed back above zero. And today it started moving higher again. So we were flirting with another inverted yield curve. I'd like to see this continue to go up and move away from that zero line. So we'll keep an eye on that as well. All right. There was a question about looking at the relative rotation graphs. This is something that Stock Charts offers. So you can do it with any group of stocks that you want to. I'm going to do it with the sectors. And in this case, I've got the NASDAQ 100, the S&P, and also the Russell included in here too. But these are all the major sectors. So the relative rotation graph basically allows you to, you can look at your chart list in multiple different ways. You can do a gallery view, so you can see the intraday, the daily view, and the weekly view. So it gives you multiple ways of doing it, but one of those is the relative rotation. And this is what it looks like. This is 1 year, a weekly chart, and it's for 10 weeks. I'm going to reduce that to a daily chart. And that's what a daily chart. Now we're looking at 10 trading days. And if we go back just 5 days, there's where the strength is over the last 5 days. So you can see XLY up here. There's the Russell. Here's communication services, financials, NASDAQ 100, industrials, energy. Those are all the strongest sectors right now. They're up here in the leading quadrant. And the ones in the lagging quadrant are the defensive, primarily defensive sectors. So staples, utilities, real estate, materials again, right here, and healthcare, and all moving lower. They're actually moving lower. So one thing you can do with this is you can actually animate it and watch these things move. So this is starting right now. It's from the whole year. You can just see what they do for the whole year, and that's how all of those sectors have moved throughout the year. As we get into April, when we get to July, you can see over here on the right-hand side, that's when the market declined in July. So I expect the aggressive sectors will be in the lower left right about now. So everything now is moving down. So it's kind of fun to watch that. But right now, all the sectors that I talked about before are in the leading quadrant right now. There it is. Next thing is a couple of other stocks to look at. One was somebody asked me about EBS. So first I'll take a look at the 1 year chart. This is Emergent Biosolutions. This is the 1 year chart as of right now. So it's at 926, down 7% today. Yesterday it was this red bar. So it's moved down even more since yesterday. There's not really a lot of clear support other than down here at about 6. So whenever I see something that doesn't have real clear support, what I like to do is use Fibonacci retracements, and we can do a retracement all the way from the bottom back here to the top right there. And that's what it would look like. So what you can see is this was the top. This is where it started to move down. And then it hit this level down here, 61.8. It's about 6.25, 6.75 rather. And then it moved back up and stopped here. And then there's a level here and there's a level here. But this does show us some, but an even better way to do it is to use multiple Fibonacci's, because you can look at this from multiple levels. I could look at it from there and I get a little bit of a different view. I can move the top one down to this level and I get another different view. So one thing that I like to do is to combine 3 different Fibonacci levels together. So in this one, the green one is from all the way from the top to the bottom. The blue one is from this level here down to this bottom right here. And the red one is actually from the top up here. You can just barely see the red line from the very top down to this bottom right here. And when you combine three Fibonacci levels like that, you can more clearly see where the support and resistance levels are. So as of yesterday, it was this red bar right here. You can see it was right at this level, basically roughly around $10. Actually ended at 9.92. So the next level below that is right down here at about 9 to 9.25, 9 to 9.20, right in between this red and blue line that's shaded right down here. And that's where we came to today. Now the day, we still got 3 minutes left, but it looks like we're going to end at about 9.30, down 6.8%, almost 7%, and right on that level. So if things continue to move down tomorrow, then the next one is these two lines here, the shaded area down here at about 8.25. So about 8.25, that's probably a major level. There's a gap down here. There's this diagonal line right here is support. So I suspect that if it continues that far, that probably will be where it stops and starts to move around, move up or sideways through that level. But eventually it could always get all the way down here, back to the 5.5 level. But for now, it's hitting these Fibonacci levels. You can see it blew through that one, came down to this one yesterday, it's down to this one today. It might very well go down there tomorrow. So doesn't look too good. By the way, the point to get in for those that might have been watching it, let me use this one and I'll get rid of that line. The point to get in would have been when it went through this 21-day moving average right back here at about $7, $7.25. So that was the buy signal right there. And then you would put this, I'll draw it in for you. You would put your stop down here, right there. And then as the price moved up and pulled back and started moving higher again, move your stop up to the bottom of that pullback. And it moved up, started coming down, but didn't stop out. Again, started to move down, didn't stop out. And then it gapped up. So when it gapped up, next thing to do would be to move it to somewhere about there, right in the middle of the gap, and you would have been stopped out today as a result. That's also the 21-day moving average. There's the market close just now. So that would have been at about 9.50 roughly. So you could have had a 7 to 9.50 move. And that's what, about 30%. Could have had a 30% move in that section right there. So this is basically what we do in the daily scan, just using the stock to illustrate it. But we want to get in as it's starting to move off of a bottom, going through the 21. We put our stop, allows us to put our stop fairly close, so it reduces risk. And we just keep moving the stop up until we finally get stopped out, either with a gain or with a smaller loss. So that's it for EBS. Also, Walmart was a question that somebody asked about. Walmart just steadily moving higher. Now it's pulling back with the market right now, so I kind of would expect that, but hasn't come down to its 21-day moving average, and the MACD is above zero, so it's confirming an uptrend. Everything really still looks pretty good with Walmart. Walmart reports on the 19th, so that's next week. So keep that in mind too. So I think this is where they reported last quarter, right here, the big gap up, and then it has just steadily been moving higher. Really hasn't closed below the 21-day in all of this period. So that's a very strong stock. It's above the 50, it's above the cloud. The MACD is above zero, it's outperforming its peers. The accumulation distribution is moving up. So everything about Walmart looks great moving into next week's earnings. And I would suspect, especially since they've been outperforming their peers, I would suspect they probably are going to have good earnings next week as well. So it's always risky going into earnings. It's kind of like going to the blackjack table and putting all your chips on black. It's going to go one way or the other. You don't know which way it's going to go. All right, someone asked about US dollar versus the yen. So it should look similar to the US dollar. So that's what it looks like. US dollar versus the yen. There's the 1-year chart. So this was the big gap down. when the market kind of got crushed as well. This was the, again, carry trade right here, where all of the traders were not expecting uh, a hike in rates, and drove not only the U.S. dollar yen down, but drove the whole market down in that period. And now it's moving back up. It's not quite at that point. It's a little above halfway to that point. But I think the carry trade has already been unwound. So I'm not so sure that this is going to happen again like this. I think this will keep moving up as long as the dollar continues to move up. All right, one more I want to show. And I talked about this yesterday, and that is Kava. Kava it's been a darling. I said yesterday it was a black candle. I said if it closed below the previous day's low, it would be a red candle. It did not. That did not happen. That's right down here. So it remained a black candle. However, it pretty much closed the gap from where it opened up here. So that's not good. That means everyone's taking their profits right here. And it continued today, continued moving down. So it's right now it's at a really important inflection point for a number of reasons. First of all, it's right on the 21-day moving average. Secondly, if we draw a trend line right here across those lows, you can see it came down and actually touched that today. So that's also where the 21-day is. So that needs to hold. And we can also draw a trend line across these, probably you do it right across these tops right here, but it's already through that one. So the next level is probably somewhere in this area. So that's the next support level right there, which is right at the 50-day moving average and right near the cloud. So probably around 132. Right now it's at 138. It got all the way up to, let's see what the high was yesterday. So the high yesterday was 172. Today it's at 138. The low was actually 136. So 36 points it dropped in one day. Might still go down to 132. I mean, I think that might be likely. It gets down here to 132, the 50-day moving average. But this might be pretty good support right here too, this uptrend line. That's an important support level. So if it does fall through that, then it's definitely coming down to 132. So that's where we are for Kava. So finally, before I forget to do this, I want to do my disclaimer that I am not a financial planner. I cannot give you recommendations of what to buy or sell or when to buy or sell. If you do everything at your own risk, because I don't know your trading style. And if you do want to engage with a financial advisor, you can go to this website right here and check them out to see if they're reputable before you give them your money. All right. Couple of things in the charts section. Interesting is the VIX. You would think as the market has continued to drop that the VIX would start to move higher, but that has not been the case. The VIX is actually continuing to move lower. It's right at about 14 right now. So this is telling me that this selling right now is temporary. Again, like I mentioned, the S&P is rolling over, but it's not really dropping dramatically. Now that could happen tomorrow with options expiration. And I think we are going to continue to see selling tomorrow. But it's really interesting to me that the VIX is not really reflecting a lot of volatility. So it's a very organized drop in the market, something that you actually would like to see. I'm going to take a look at, there was another question about the IWM, the Russell 2000. And the question was related to where do you set your stops, especially when there's a big gap like that. Where do you set stops? Well, first of all, the gap is a good place to set them. So you could set one here, the bottom of the gap, and set one here, the top of the gap. So already would have been taken out at the top of the gap. You can also can put one here, which is roughly where that resistance was, came up and got rejected and got rejected again, and then finally broke through right there. But the more important question is, where did you get in? So as you know from the daily scan, I like to get in when there's been a pullback and it goes above the 21 day. So that would have been right here. So if you had got in back here, it could also have been right here. There's another one. So that would have hit the scan. This one would have hit the scan. This one would have hit the scan. So there's a pullback and above the 21. In the case of this one, you probably would have got stopped out. In the case of this one right here, your stop would probably be right at the bottom of that candle. So on this one, the original stop would have been down here. And then as it pulled back and started to move up, you would then move the stop up. And it pulled back and started to move up again. You would move the stop up to here. And then when it gapped up right there, you'd move your stop up to the bottom of the gap and get stopped out right there. So you would have plenty of profit going through that process. If you got in on this one, it'd be the same thing. Your stop would be right here. Now, this would be a loss because you get in a little higher, and you might have got stopped out there. So you probably would have probably put the stop a little below that candle, probably down here at the bottom of the pullback. So, and then when it gapped up here, you move the stop up to this line to the top of the gap. So it's a long answer, but really the answer is, where did you get in? If you got in after the gap, so this thing gapped up and you got in up here thinking that it's definitely going higher, well, then you definitely should have put your stop. I wouldn't have done that. I would not have gotten in here because it's already run too far. I don't like to chase. But if you had chased it up there, then I would definitely protect yourself and put your stop at the top of the gap. If you got in earlier, like back in here, then you can move your stop up as the price moves up. So that's really the key, is when to get in. And I would not get in on this gap up because I don't like to chase, because what you're seeing right here is exactly what could happen. And this could continue to come down. It actually could get down to this support level, which is just below the 21, could even come back down and close the whole gap down here. So anyway, that's my answer to that, where to set your stops on that one. The last thing I'm going to do is show you the daily scan. Some of ours got stopped out today. So these are the ones still in. We'll take a look at each one of these. DocuSign started to pull back, but it's still above the stop level. Google definitely pulling back and getting close to the stop. The stop now is right at the 21-day moving average. So this one really needs to turn around here, and it would be positive if it does, although it would be right where we have our stop anyway. But this could easily get stopped out soon. Here's Intel. Intel was on the list yesterday. It moved up a little bit today. The whole market went down, so it just kind of hung in there, didn't go anywhere. Oracle, again, pulling back, rolling over a little bit, but still above the 21. VRT, same thing, still above the 21. Has not come down to the stop level yet. So those are all the ones that have not been stopped out. Let's look at the ones that have been stopped out. So this one here, actually, Sentinel, I exited this because of the shooting star candle right here at the top of the range. That's a reversal candle. Whenever I see those, I usually, depending on the stock, if it's a really strong stock, I might stay in, and especially if I got in a lot lower. But in this case, I just got out right there. So got out with a profit. You can see right here, just about 2%. WLDN dropped through the stop. This was an early entry. Actually, let me look at the daily scan. Where are they? Daily scan watch list. So we'll look at WLDN right there. So that's where we got in. And you can see it pretty much, it also had, there's the shooting star candle. Like I mentioned before, this is often what happens. So unfortunately, you got the shooting star the day after we got into it. So it was looking good that day, but the next day it didn't look good. So that one stopped out. Um, what else got stopped out? RTX was stopped out. Let's go here and look at RTX, this one. So we got in right here, started to move up and then started pulling back, came right back to the 21. We had this stop set right there at 121 and it was stopped out and it continued to go lower. So now it's down to 119. So that's $2 lower than where our stop was. This one may still continue. Everything else about it doesn't look good. You can see that the MACD was below zero. So I might make a note on that on RTX. It says 8-week AD line, but also MACD less than zero. So we want to use this as a journal to see where we could improve. And the last one that got stopped out was one of our really strongest ones, was Powell. And actually, it got stopped out and then it started to pull back and move up again. So unfortunately, this was right at the bottom of the gap. It hit the 21-day and the MACD is rolling over, but it's above zero. And the long-term MACD is rolling over too, but still above the sell line. So this could actually turn around and start to move back up. We don't know. But it got stopped out at 294. So we set our stop. Now we got in this way back here. And what you'll notice is on Powell, that's a 13% gain in 16 days. So that's not bad. Right now we are up 2%. Remember the goal of this, besides learning and getting better, the goal of this whole exercise is to find stocks that are strong that will continue to move up. Even if they pull back, they don't pull back far enough to get stopped out. If they do get stopped out, the stops are tight, so the loss is small. Intel is the one that we would lose the worst on right now. But the hope is that some of these will move up and not get stopped out and pull back and then start moving up higher, and the stop percentage just keeps going higher and higher and higher. So the goal, the ideal situation is that this list, this 14 at the top, is populated all with stocks that if they were stopped out, they would be stopped out with a gain of 10% or more. It's hard to do. But the most important thing to remember is the list that we're working on is the top 10 list. So they're all strong stocks. And that's one of the things that sometimes folks get locked into just watching one or two, which is okay if you're trading options. But if you want to set up a portfolio, if you want to create a portfolio of strong stocks, you want to have something where you are pretty sure that they are going to, that there's plenty of stocks in there. So this one right here, right now, this is the top 10 list that I use. There's 208 stocks in this list right now. If I look at it in a summary mode, we can see that these are the ones, and we'll look at it year to date. Year to date mode, this was 2,500. And these first two they just started trading before a year. That's why they don't have anything. But you can see there's only 3 of them right now that are negative. Out of 208, there are only 3 that are negative. And the next one down the list is 5%. And we can just move down. I mean, 30% is what the market has done. So these are all 30% gainers year to date. We can go down and see what is doubled down to 100%. Way down here, here's 100% gainers for the year. And all the way down to the very end, we got 300, 400, 600%. So my point is, this exercise should hopefully teach you that you don't have to worry about getting stopped out. The point of trading is not to be right. In fact, you should want to be stopped out if your stock starts to move lower. And you should want to be stopped out at the lowest amount possible, the lowest loss that you can. Um, so eventually we will have strong stocks on the top of this list. And especially if the market's moving up. Now, if the market tanks and starts to, really roll over and we go into a bear market, then our stops are going to take us out anyway. And we're not going to see anything else on the scans. The scans just will stop returning things. In fact, I've already noticed that there's only one or two each day now on the scans. So the goal is, to build a portfolio of strong stocks, and you don't have to worry if you get stopped out because there's so many more coming right behind it. There's lots more stocks that you can add to this list. As long as you're working off of a good original list, that's the important thing. All right, so that's it for today. Thanks for watching. Good luck tomorrow, options expiration. I expect the market to continue to sell off. It might even continue into Monday or Tuesday of next week. And then we'll see. We'll hopefully then have the rally into the end of the year. So thanks, everyone. And please like and subscribe to the channel so I can keep it going. And I really appreciate you watching. Take care.